What is up, guys? Welcome back. As some of you guys know, I have a lot of experience in the traditional markets, selling stock options, buying stock options, different type of stock trades, futures trading, etc. So what I wanted to cover today was something that I think a lot of people in the crypto world are missing, and that's a small snippet of how to do technical analysis. This would be specifically identifying levels of support and resistance, and I also want to cover why you really can't do it on small cap cryptos or stocks, similar to drip. But before I do that, I'd prefer to give away some drip. So if you guys don't know, we hit 2,000 subscribers on the channel over the weekend, or maybe last Friday, which is extremely exciting. Thank you all for subscribing. That's extremely helpful. So since we hit 2K, I want to give some airdrops away of 2drip to a few people. To get entered, all you have to do is go watch this State of the Union video. I jumped on with the Ox Doctor, Driptopian, and DecryptoCat to discuss all parts of the Forex Shark ecosystem. So all you got to do is watch that video, comment about something you liked in the video, and make sure to paste your wallet address, because I'm going to put those wallet addresses in and make my decision with a random number generator, something like that. So again, to get entered, watch the video, comment something, and leave your wallet address. Now real quick, let's check out Drip and do a quick airdrop. So it just broke the 1800 mark on deposits. That's pretty exciting. Drip's holding up fairly well. It's down under $9 at $8.79. It's kind of been bouncing up and down. There's a nice big buy there that shot us up to $8.92, but it's been a little bit above $9, down into the $8.50 range, which is kind of to be expected as everything is still paused. I don't think Drip's going to go anywhere until it gets on pause. So unfortunately, this could continue to go lower. I'm not sure that we're going to see an animal farm launch this month. It's highly unlikely at this point. But since I don't plan to sell right now, I guess the price really doesn't matter, because even if the price was shot up to 50, I would feel warm and fuzzy, but I wouldn't actually be selling at these prices. So it is what it is. So I bought a couple Drip, and I just want to kick them off to one team member. Let's do it real quick. We'll do it to one matching player, no minimum, run it. Okay, the wallet address ending in 50647. You are the winner. And sorry, I'm an idiot. I only put one in the budget, so I had to send two separate individual ones. So that's sent off now. Congratulations to 50647. As you can see, both of those are sent. Let's move on to the other part of the video. And before I roll the film, if you guys would not mind, please like and subscribe to the video. It really does help. I'd like to keep growing the channel so more people can see it, our word gets out a little more, hopefully some new investors come on. So by liking, subscribing, or sharing the content, it helps the whole ecosystem. So like I said, the clip you're about to watch is just a small piece of a free webinar that I recorded a couple years ago. The webinar showed people kind of a 5-step flow or a 5-step system to make their options selling more profitable. So the example shown won't be exactly like what you're going to see in the crypto markets, because this is on an ETF called IYR, which is actually a real estate ETF. I don't know if you guys know this, but you can actually play the real estate market inside of the stock market. So IYR is fantastic. It generally trades in these consistent patterns. So it's a great one to make money on. So I'm going to have you guys watch this video just to wrap your mind around what support and resistance is and how those levels are actually created. So watch this short little clip, and then afterward, I'll tell you the two main reasons why it doesn't apply to cryptos and small cap stocks like penny stocks. Enjoy. Support and resistance are actually pretty easy to understand as well. Consider support kind of like a floor, and consider resistance kind of like a ceiling. So if you see an area where the stock price came down and bounced off of, then made its way back up, it's because it hit a floor or an area of support. And if you see the stock price go up and bounce off a ceiling and then make its way down, it's because it hit a level of resistance. Truly, it really doesn't need to be any more complicated than that. I think the easiest way to show support and resistance is just to draw lines where the stock price has bounced off multiple times. So let me throw a couple quick lines in here. So support and resistance lines will never be perfect. Sometimes you'll see candle wicks poke through, but this is good representation of support and resistance. So it can look a little bit complicated, but this is actually how it works. Down here in the 76 range, there was a big pool of buyers. These are people that wanted to go long on the stock or thought the stock price was going to go up. That pool of buyers caused the stock price to go up. Once it got up here to a certain level around 82, there was a pool of sellers. So a lot of the people that bought the stock down here at 76 decided to sell up here at 82. That's a good $6 gain. And that pushed the price down. After that drop, it took a couple weeks for it to rally back up. It finally hit a level of resistance right up here at $84. Then you had a bit of a sell-off, and it dropped all the way down here to about 80. So down here at 80, there was a pool of buyers, and that caused the price to go back up to 84. So why did it fall again here? Why did it hit the same resistance level at 84 and then fall back down again? Well, part of the reason is because that's what happened last time. I know that seems a little too simple, but this is how it really works. Every trader in the world out there, potentially millions of people, are looking at the same chart. If they're looking at this 1 year, 1 day chart, every single person is looking at the same support and resistance levels. That means every trader, hedge funds, retail traders, New York, Miami, Dallas, no matter where they're at, they're all looking at the same levels of support and resistance. So if I bought the stock right here at 80, I know that last time it hit 84, there was a big sell-off. So what I want to do when I'm getting into that trade is I have a price target. I have an idea of when I'd like to get out. How much money do I want to make on the trade? So what I do is I bought it at 80, and I know last time it hit 84, it sold off. So I'm going to place my sell order here right up around the 84 range. Maybe it's 83.75, 84, 84.50, but right in this range. So not only do I do that, but so do thousands of other traders. So there's a giant pool of sell orders right here. Everyone who bought down here in this range knows that it's extremely possible that once it hits 84, there may be a little bit of a sell-off. So we all place our sell orders up at 84, and it just sits in this pool just in case it comes up to 84 and it hits. So it made its way up to 84. It caught that big pool of sell orders just like we thought it would, and we had a sell-off. So then what did it do, right? Well, what happened last time? Last time it hit 80 right here, it bounced up and made its way to 84. So what happened when it hit 80 this time? Since people saw the price last time bounce from 80 up to 84 and then sell off, they knew that there was a possibility that if it sold off and came back down to 80, that it would bounce off and rally back up to 84 again. So people put a pool of buy orders in here. And just like they thought, it bounced off of the 80 support and made its way back up to resistance at 84. So what happened the last couple times? Last couple times, it hit the resistance at 84 and was rejected. So everyone put a big pool of sell orders in here. Once it caught those sell orders, there was a big old sell-off. That caused the stock price to break all the way through that level of support at 80 and ran all the way down to 76. Luckily for the stock, there was a big pool of buyers down here right at 76. But why would there be a big pool of buyers right here at 76? Well, look what happened last time. Last time it hit 76, 76 acted as support, it bounced off and rallied up. So anyone looking at the chart and looking at support and resistance lines would know that there's a really good chance that if it comes down and taps 76, that that's going to get bought up. So of course, thousands of people put their buy-in orders right here. Once it came down and tapped 76, just like it did last time, the stock ran all the way up to 84. There was another big sell-off because there was a big pool of sellers up there. All these guys have made $8 per share on their stock. That's a pretty significant win. They were happy with those gains, so they sold off. It made its way all the way down to 76, where of course there was a big pool of buyers, because just like the last couple times, that was the level of support. And that shot it all the way back up to 84. But as you can see this time, once it got to 84, it was breached. And generally speaking, when support or resistance is broken, there's a little bit of a run, either to the upside or the downside. So it busted through resistance, worked its way all the way up here to almost 88. And then when it came down, this 84 level that was previously resistance now acts as support. So the stuff isn't rocket science, guys. All you're doing is utilizing support and resistance to increase the probability of winning your trades. If you know everyone's going to be looking at the same charts, you know that there are areas that will likely be support and areas that will likely be resistance. And if you place your trades in those areas, it will give you a higher statistical probability of winning those trades. All right, guys, hopefully you enjoyed that, and hopefully it casts a little bit of light on what actually creates support and resistance levels. Again, support and resistance is a fundamental part of technical analysis, but it's really hard to do on crypto. So here's the two main reasons it doesn't work on Drip, which is anything small cap, like a small cryptocurrency, any of the little guys that have a small market capitalization rate, or penny stocks, which is basically the same thing. The reason it doesn't work on small caps is because big money can come in and just blow right through a support and resistance level. So for instance, if you were looking at the chart, the Drip chart above, and you said, hey, there's a serious level of resistance right here, someone could come in with a $500,000 buy, which isn't that much in the scheme of things, and blow right through that resistance level. So on small cap stuff, there's not enough money in the system to make it so a big investment or a big sell wouldn't drop you right through those levels. So if you're talking about Bitcoin and you want to come in and make a $500,000 buy, it's barely going to register on the price action. And if you're trying to make a $500,000 buy in the S&P 500, it's probably not going to register at all. So because there's so much money pooled in those, you can't sway it just by swinging some capital around. In small cap stuff like penny stocks and Drip, you can force the price around. All you have to do is load up on big buys or big sells. So just be aware of that. When people say you can't do technical analysis on cryptos, what they're basically saying is you can't do accurate technical analysis. You can certainly look at the support and resistance levels and know that people are looking at those levels and maybe thinking about buying there or thinking about selling there. But that analysis is going to be much harder to rely on because there's too many factors that can mess that up. And one big buyer could come in and swing the price right through your resistance level, or one big seller could punch it right through your support level. So that's why it doesn't work on things like Drip. The other main reason is in the main stock market, like I just showed you, there's big pools of buyers and sellers. So at a previous level of support, there's a ton of people who are already just going in the system and placing their order saying, hey, buy at $9. I'm gonna buy $20,000 worth of Drip if it taps $9. And they'll just place that good to cancel order out there. And then if it comes down and taps 9, then it fills. If it doesn't, the order just doesn't get filled. Eventually that trader will go in and cancel that order and readjust their entry point. Same thing on the top side. If we know 15 on Drip is a level of resistance, nobody's able to really just go in and place their trade at 15 saying, hey, when Drip hits 15, sell this many shares. So since there's no pool of buyers just automatically sitting in there, people actually have to do it manually, which means they have to be watching the charts, which means a lot less people can do it, which lowers the probability that support and those support and resistance lines will really mean anything. So hopefully that makes sense, guys. One, ask me any questions that you have down below. Two, that webinar is like 90 minutes long, so I'll probably throw some snippets up so you guys can watch it. Let me know if you like content like this, if this would actually be helpful and help you understand the markets better. I'd be happy to share more. Just let me know if it's something that you would like to see. Anyway, happy investing, guys. Take care.